Good afternoon, ladies and gentlemen. I am Harit Oberoi, and I would like to extend a warm welcome to all of you for joining us today on IndiaBonds Investor Education Initiative, namely Bond Express. Let me take the privilege to introduce you to our esteemed guest, Mr. Jairam Shridharan, MD of Piramal Finance. He has over 2 decades of rich domain expertise and specializes in setting up and scaling new businesses. Before joining Piramal, Jairam was the CFO of Axis Bank. He has handled a variety of roles at the bank and was previously President Retail Lending and Payments. Jairam holds a Bachelor of Technology degree in Chemical Engineering from IIT Delhi and postgraduate diploma in management from IIM Kolkata, where he was awarded the Roll of Honor for academic excellence. In 2022, he was awarded the FE Pillar of BFSI Industry Award at the Financial Express BFSI Summit. And in 2019, Institutional Investor magazine named Jairam as Best CFO in their All Asia Executive Team for Banks based on sell-side analyst votes. In 2015, he was chosen by Economic Times as a part of their 40 under 40 list of India's hottest business leaders. Our second speaker, Mr. Yesh Nadkarni, is the CEO of Wholesale Lending at Piramal Enterprises Limited. He has over 2 decades of investing experience across debt, equity, and special situations spanning India, Australia, and Southeast Asia. As CEO of Wholesale Lending, Yesh is responsible for further expanding PL's wholesale lending business, building a high-quality granular book across different real estate corporate segments, establishing and strengthening key client relationships, and using data analytics AI to enable superior underwriting. Yesh has Masters in Finance from London Business School and is a Bachelor of Engineering from University of Pune. Our third speaker, Ms. Upma Goel, is CFO of Piramal Enterprises Limited and is responsible for finance function of Piramal Enterprises and all its subsidiaries. She played a key role in the integration of Diwan Housing Finance Corporation Limited into Piramal Capital and Housing Finance Limited. She's a chartered accountant with 3 decades of post-qualification experience in the financial services industry. Her core competencies lies in business strategy, financial control, capital restructuring, mergers and acquisition, tax, risk management, and regulatory compliances. In September 22, she was felicitated by the Financial Express as the FE CFO Connect Conclave for her exemplary contribution to the industry and to the Piramal Group. Now I hand over the dice to the panelist. Over to you, sir.
Thank you so much, Harit. Welcome, everybody. We want to talk to you a little bit about the Piramal Enterprises performance numbers, about our strategy, and then a little bit about the issue itself that we are launching tomorrow. Let me start with some of the performance numbers, and during the course of this presentation between Yesh and myself, we will tell you about what we are doing in the retail business and in the wholesale business of Piramal Enterprises, which, as Harit mentioned, is an RBI regulated NBFC entity. In the financial year 2023, the performance numbers of which we will use in most of the deck, and in some places where we use June data, June 23 data, I will point that out separately. As of March 30th, 2023, our AUM had moved from a mix perspective from 3367 with a retail wholesale mix at the beginning of the year to 50-50 by the end of the year. This is in line with our stated strategy to become a more wholesale, a more retail-oriented NBFC institution from back in the days when we used to be largely a wholesale institution. This change and this diversification of the book has been enabled by a two-pronged strategy. On the one side, we have grown the retail AUM quite materially. You will see on the slide that the retail AUM grew 49% year on year from 21,000 crores to 32,000 crores. Simultaneously, we have also been bringing down our legacy wholesale book, what we call Wholesale 1.0. This is the large ticket developer finance book from the first version of our wholesale business, which, given a lot of the challenges in the real estate industry in those vintages, has had some challenges. This book we reduced quite significantly by 33% year on year, from 43,000 crores at the beginning of the year to 29,000 crores at the end of the year. While we have been doing this, we have also been simultaneously building up a new wholesale, what we call Wholesale 2.0. It's a much more granular book, and it includes both real estate lending and other corporate lending. Together, those comprise about 2,800 crores of business at the end of March 2023. We have a very, very strong balance sheet position with amongst the highest capital adequacy ratios of large NBFCs in the country. At 31%, our capital adequacy at the end of the year was more than twice the RBI required minimums. That shows the level of robustness of our balance sheet and ability to withstand any shocks. The metrics that I shared were all in line with the core strategies that we have articulated to our debt and equity investor community over the last few years. The key tenets of that strategy are listed on this slide. The first and most important part of our strategy is the diversification of the asset side of the book and changing the mix from a wholesale-led business to being a retail-led business. We have stated that we would like the AUM mix to be 2/3 retail and 1/3 wholesale in steady state. Within the retail business, our target segment is what we like to think of as the Bharat markets, which is markets in the outskirts of tier 1 cities and in tier 2 and tier 3 cities. And even within that, customers with a small wallet size. Those are the customer segments and geographies which we believe can be appropriately served by an NBFC model. And those are the segments that we cater to, and we try to meet all of their lending needs through various product offerings that we have. In terms of how we go about our business, at the core of our how is technology and analytics. I will talk a little bit more about it in a forthcoming slide. While we are building the retail business on this foundation of new age technology, analytic abilities, and targeting the Bharat markets, we are correspondingly also building a granular wholesale lending book. We believe that the wholesale lending opportunity in India continues to be vast, and number of providers of capital, debt capital, to a lot of the corporates that we like to serve and a lot of the real estate developers that we like to serve, the supply of credit to that segment continues to be subpar. And we believe that we have a role to play in developing that market. From a liability standpoint, over the last 3 years, since 2019, we have adopted a very conservative liabilities mix with very balanced ALM and with a well-diversified mix in terms of sources of capital as well as the instruments that we use. We will talk more about it in the later part of this presentation. Finally, with a 30+% of equity capital, it is natural that we would remain open to inorganic opportunities. The Piramal House has, over the last multiple decades, been known for value-accreting acquisitions and now is no different. We believe that there are a lot of value-accretive acquisition opportunities that are available in the market, and at the right time and at the right price, we would be willing to seek out those opportunities. With that, let me get into some of the details of the retail lending business, starting with the top of the house view of how our AUM mix stacks up, and then we will talk about individual businesses. At the top of the house level, our AUM as of end of March 2023 was 64,000 crores, roughly flat over the previous year. As I mentioned before, over the last 2 years, our overall AUM has remained largely static. That is entirely by design, because we want to use this time to change the mix of the AUM rather than grow the AUM itself. So what we have been doing for the last 2 years is continuing to consolidate out the wholesale book and try to exit a lot of the wholesale 1.0 positions and fill them back in with retail business by launching a lot of new retail products as well as enhancing our geographic presence. Through those strategies, we have gotten to a point where we are now, for the same 65,000 crore kind of book, we are at the end of March, 50% retail and 50% wholesale. Which means that retail, to look at the chart on the bottom left, has grown roughly 49% year on year from a 21,000 crore book at the end of last year to a 32,000 crore book at the end of this previous year. While that has been happening, the wholesale book, particularly the wholesale 1.0 book, has been consolidating and has come down by 33% from 43,000 crores to 29,000 crores. And as that has happened, Yesh and team have also built out a wholesale 2.0 book, a very granular book of roughly 2,800 crores. The retail strategy at Piramal is a branch-led strategy. We believe in the power of branches to reach the customers that I spoke about, the budget customers of Bharat. We believe that these customers can be served once they have been originated electronically and digitally. However, it is very important to have physical presence at the point of customer acquisition as well as at the point of collection. With that in mind, we have continued to invest in branches across the country. The blue dots in the map on the left show you all the branches that Piramal had at the end of the Diwan housing acquisition. That's roughly 300 branches. Since then, we have opened another roughly 125 branches to get to 424 branches of the conventional type and another 136 branches of microfinance, which are Piramal co-branded branches sourcing only for Piramal, but operated by our BC partners. So those are the roughly 560 odd distribution points across the country from where we operate. The dots that you see on the left are only our conventional branches. We have not mapped out our microfinance branches on this map. Another way of distribution for us is the small distributor finance, a small developer finance business. Through this business, we want to use the small scale builders and developers in small town India as a point of distribution for our mortgage business. In outskirts of tier 1 and in tier 2, tier 3 markets, there are a host of small developers who have small lending needs. And our hope is that through a tight collaboration between our wholesale and retail lending businesses, we can originate those clients on the wholesale side, fund their projects, and then be taken out by retail mortgage lending at the other end as the development gets closer towards completion. This is a very powerful model and a model that very few in India are able to pull off very well. Our belief is that it is something that we can do much better than most players out there. Moving forward, if you look at our product mix, we talked about distribution so far. If you look at our product side, there are four main product categories that we operate out of. Fundamentally, we are an affordable housing company. Affordable housing is about 17,000 crores of our AUM, comprises 55% of our entire AUM pie. And our housing loans have an average ticket size of 18 lakhs, firmly in the bucket of affordable housing. We also have a large LAP business, loan against property business. But this as well is towards the smaller end of the spectrum. As you can see in our average ticket size, which is only 20 lakhs. We have about 7,000 crores of AUM in this product, and this comprises 23% of our AUM. We have a used car financing business, a business which is relatively new and has been around for only about 7 quarters. This has an average ticket size of 6 lakhs, and we have about 800 crores of AUM here. Finally, we have 6,000 crores of unsecured lending exposure, comprising 20% of our AUM as of March end. This unsecured lending business comes in 4 variants. There is a variant for salary personal loans. There is another for self-employed unsecured loans, or what is called UBL in the market, unsecured business loans. We do some digital lending. And finally, we do microfinance. Those 4 products put together form the 6,000 crores, which we look at as unsecured lending. So as you can see from our product stack, we have everything from a 30,000 rupee microfinance loan all the way up to a housing loan. And our intent is to look for product needs in our customers' life cycle for the customer segments that we are trying to serve, these budget customers of Bharat, and based on that, do our product releases. As you can see, we have been consistently launching new products year on year and actually quarter on quarter. Without going into a lot of details, what I'll mention is that our product stack is pretty complete. There are a few more products that we are still interested in and haven't yet launched. But in the main, the products that we have launched are going to remain the bulk of our business going forward as well. Finally, a note on how we operate. So far, we've spoken about what we do. Now I want to spend a few minutes talking about how we do it. At the center of our execution strategy in retail is what we call TAP, or technology, analytics, and process design. Those are the three things that form the foundational layer on which our retail business is built. On the tech side, we are fortunate to be building this business in an era where tech has been democratized. There is a lot of publicly available tech architecture and a lot of open source that has developed. What this allows us to do is to build a cloud-native business. A few years ago, if you were setting up an NBFC, it would have been impossible for you to build a cloud-native business because cloud infrastructure was not well developed in the country, and the regulatory environment did not allow you to take your data outside the country from a cloud perspective. Today, with a well-developed cloud infrastructure, it is possible for us to do an entirely cloud-native business, and that's the choice we have made. We do not own any servers. We essentially operate entirely off the cloud. We also have made a bunch of choices around the software development piece, which is core to tech today. Most of tech today is software, and as hardware has gotten more and more commoditized. On the software side, we have tried to build core competence by building our own software engineering team. We have a large engineering and analytics team, roughly 300 people that work out of a center of excellence based in Bangalore. And this team invests to build most of our analytic and technology products that are used in our everyday life. We build most of our software ourselves. We build most of our machine learning models ourselves. That is what we believe gives us competitive advantage in a market where these skills are what are going to truly differentiate you. Finally, we would like to talk a little bit about the wholesale side of the business. And for that, I would like to invite the CEO of our wholesale business, Yesh Nadkarni, to say a few words.
Thanks a lot, Jairam. Good afternoon, everyone, and thanks a lot for taking the time to join us today. Jairam has, during his speech, covered the wholesale strategy quite well. I'm just going to add a few points to what he said. But if you really take a step back, I think the major thing for us as far as the strategic priorities are concerned is that we have the legacy book that we need to actually manage while building the new and diversified and granular wholesale book as well. So our strategic priorities are divided in two parts, therefore. Reduce the legacy book, or 1.0 part of the wholesale book as we call it, and then rebuild that as we actually use the book as well. And in line with that strategy, we have made consistent and significant progress in reducing our old book, which as at March 2023, stood at 29,000 crore versus 43,000 crore 12 months ago, as at March 2022. This is basically a reduction of 33% in the book size. We are also building a new diversified and granular wholesale book across different strategies. The core strategy in the new book build out continues to be real estate developer financing in the top 10-12 markets where we have had presence over the last 10 years. And therefore, we are very well entrenched in the ecosystem in those markets and the ecosystem overall. There are focuses on financing mid-market residential projects in select markets, in select micro markets where the demand supply situation continues to be favorable. We do identify a big gap in the funding markets, given the fact that a lot of participants in that market space have either shrunk their balance sheets or partly or completely exited. But at the same time, we also feel that the vintage as it represents today in terms of the demand supply situation, which is favorable, in terms of the affordability levels for home buying, which are at an all-time high in the last 20 years, etc., are very, very conducive for us to build a business here. The key operative here is to build a book that is diversified and that is granular. And to that effect, we seek to build a business where the average ticket size is in the range of 200. In real estate, we also have a sub-strategy, which we call small developer financing business, where we are targeting small to mid-size developers and small to mid-size projects in tier 1 market outskirts, but also in select tier 2 and tier 3 markets where we have a strong presence through a retail branch network and the business that we do on the retail side, where the loan ticket size would be in the range of 10 to 50 crore, the average being in the range of 20s. That's another piece of our strategy that we have started executing well. The third piece of our wholesale strategy build out is around the corporate mid-market lending book, where the intention is to basically lend to small ticket corporate borrowers across multiple sectors. Some of the sectors that we actually are focused on in order to build a book on are NBFCs, cement, pharma, IT, renewables, etc. So forth. This part of the strategy actually gives us sectoral diversity as it relates to our wholesale book as well. We also spent a lot of time in actually building the necessary infrastructure for building a strong and profitable business in the wholesale space. We follow robust analytical screening and underwriting processes, have hands-on asset management as reflected in the financial expertise, but also the technical expertise to be able to manage the portfolio once the risk is contracted on our balance sheet, and also a very strong governance and approval structure through which we integrate this. In terms of where we are at, as of March 2023, the new book stood at 2,800 crore, of which roughly half is real estate and the other half being the corporate market lending. And as we go from here, we do actually see consistent growth in this book build out as we penetrate these markets. I'll hand it over back to Jairam for his slides now.
Thank you, Yesh. A quick note on our liabilities side. On the liabilities side, our strategy has been marked by two big choices. First, to be very conservative with respect to ALM and build a complete match between asset and liability maturities. And two, by diversification in terms of borrowing instruments as well as lenders. So the second is what you see on the slide. You can see that 58% of our borrowings are in the form of NCDs and 27% in the form of loans. You will also see here that short-term borrowings in the form of CPs, etc., form a fairly small part of our borrowing pie. On the right-hand side, you can see that in terms of lenders, our relationship with the large banks in the country being very, very strong means that banks tend to be a large part of our borrowing mix, with 56% of our lenders being banks. Mutual funds and insurance companies are 17% of our lenders. You will see here that an issue like the one we are discussing today helps in the form of increasing diversification, both on the instrument side as well as the type of lender side. We believe that with the strength of our balance sheet, as seen in our capital adequacy, the strength in our strategy, as articulated by Yesh and myself over the last few minutes, and the strength of some of the numbers that we have been able to deliver over the last few years, it provides investors what they might seek in terms of a strong debt issuance. With that, to give the details of this particular issuance, I'd like to go back to discuss the tranche details. Harit, you want to take over?
Thank you, sir, for explaining about the company and the business model and structures. Now, to the audience, the very reason why we guys are here is to understand what the product offering is. And right now we're talking about the maiden public issue of NCD by Piramal Enterprises Limited. The nature and the type of instrument is a secured, rated, listed, redeemable, non-convertible debentures. Lead managers to these issues are AK Capital Services Limited, JM Financial Services Limited, Nuvama Wealth, which was earlier known as Edelweiss Securities, and Trust Investment Advisors. For this tranche, the issue size is 200 crores, which is the base issue size, with an option for oversubscription of 800 crores, aggregating to total 1000 crores. So 200 crores is the base issue size. Green shoe option is 800 crores, aggregating to total 1000 crores. The face value of this bond is 1000 rupees each. And minimum application for NCDs is 10,000 rupees for 10 NCDs across all series collectively and in multiple of 1000 thereafter. Piramal Enterprises enjoy a very good credit rating. It's ICRA AA stable and CARE AA stable. Both the NCDs will be listed on BSE and NSE. So they are tradable securities listed on the capital market of BSE and NSE. Issue opening date is 19th of October, that is tomorrow, and proposed closing date is 2nd November 23. However, the issuer controls the right of earlier closure if there is an oversubscription of this issue. So as public issue of NCDs, it's always preferred to do first come first serve basis. So advise to all the investors to apply on very first day itself. Now let's understand the coupon rate and the issue structure. So the issue has 4 tenure options, which are 2-year, 3-year, 5-year, and 10-year options. So you can have a short duration investment as well as a long dated investment as well. For 2-year, the coupon rate is 9%. For 3 years, the coupon rate is 9.05%. For 5 years, the coupon is 9.20%. And for 10-year duration, the coupon is 9.35% for all category of investors. The interest payment frequency is annual for all these leads. Lead managers, as I already mentioned, AK Capital, Nuvama, JM Financial, and Trust. Registrar to the issue is Link in Time, and debenture trustee is IDBI Trustee. Thank you all.